please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Good evening, you're watching CNbc TV 18 and this is After the Bell. Let's take a look at the top headlines that we're tracking for you at this hour. Markets start the truncated week on a positive note. Nifty gains 70 points while Sensex ends just shy of 31,500. Bank stocks underperform while metals shine on global cues. Good sales numbers in September drive auto stocks higher. Tata Motors surges over 3% after it sees strong growth in the CV segment. Bajaj Auto also gains at the back of good sales in September. M&M gets a second chance to match Tata Motors' bid for the e-car order from central government entity. EESL tender rules allow the runner-up to match L1 bidder for 30% of the total contract. M&M likely to get a week to rebid. Reliance Communications may miss its year-end repayment deadline. Company confirms to CNbc TV 18 that it will repay 25,000 crore rupees or 60% of the loans by March 2018. Set to sell 100% versus the earlier decided 51% in the tower business. Arcom looks at various options to garner money from their spectrum. This as Indian banks get ready to take a haircut of 6,000 crore rupees in their loans after they convert part of their debt to equity in the company. That's an exclusive. Captive power producing industries like steel, cement and aluminium face a huge shortage of coal. Seek government intervention and demand that Coal India sticks to contractual commitment. That's another exclusive. The government wants a rate cut. The industry seeks the same. But a CNbc TV 18 poll of India's top economists shows that the RBI may hold the repo rate at 6% come tomorrow. Details in just a bit. Well, lots packed in the next 30 minutes, but first let's get you the market action of the day. It was a great start for the October series, but markets failed to rally further and ended at the low point of the day. It was the third consecutive positive end after a 7-day losing streak. The Nifty opened just shy of 7 points shy, that is of 9,900, but saw selling pressure at a higher level. That index closed with gains of about 0.75%. The Sensex mirrored the Nifty and ended with gains of over 200 points. It was a subdued performance across the broader markets though. The mid-caps ended 0.5% in the green, while Bank Nifty slightly underperformed with a 50-point gain. Let's bring in Anuj Singhal to decode the day's trading action further for us. Anuj, should bulls be happy today or should we brace up for some consolidation this week?
Well, good day for the markets. There was quite a bit of rally, but the market ended off the high point. The opening was the high point for the market, and the Bank Nifty underperformed, which is quite interesting. Mid-caps did better today. Metal stocks made a big move led by Hindustan Zinc. In terms of Nifty gainers, Reliance did well, Tata Motors was higher, UPL did well, oil and gas as a sector did well, so GAIL, HPCL and BPCL were all higher. Bharti Infra, Indiabulls Housing and Bajaj Auto were the other big gainers. But the story of the day was outside index. A lot of big gainers today. Jindal Steel, Hindustan Zinc, ICICI Prudential, PC Jewelers, India Cements, Apollo Hospitals, and of course, how can we forget Reliance Communications, where the deal with Aircel is off and the stock was down about 12%. Jury's out on whether the market has made a bottom because 9,700 is acting as big support, but on the way up, 9,900 to 9,950 is emerging as a bit of a hump for the market, especially considering that Indian market is now underperforming even on good days.
Okay, Anuj, now here's what the markets will be watching for tomorrow. The RBI's Monetary Policy Committee is set to announce its decision tomorrow. The government is hoping for an interest rate cut in a bid to boost growth, especially after the dismal performance in the June quarter. Industry is also keen to see a cut in rates. But the CNbc TV 18 poll across India's top economists shows that the RBI may hold the repo rate at 6% this time around. Ritu Singh is here with the results of our survey. Ritu, what do the numbers suggest?
Well, I'd start by saying do not hold your breath for a rate cut from the Reserve Bank of India. Our poll suggests, in fact, 100% of our respondents say they do not see any rate action from the Reserve Bank of India, given that inflation has been inching up, that the rupee has come under pressure, and that global uncertainties loom large. We also asked our respondents if they see any rate action in this entire calendar year, and 60% said this is the end of the rate cut cycle, but 40% believe there could be one more rate cut in the month of December. As far far as the cash reserve ratio is concerned, 100% of our respondents said they expect no change from the RBI on the CRR ratio. On the macro parameters, the results were more interesting. We asked them if they expect the RBI to revise its FY18 GVA growth forecast from 7.3%, and 80% said, look at the results here, they expect that growth forecast to be brought down to 6.5% to 7% on the back of the disruptions we've seen with the implementation of the goods and services tax. On the inflation front as well, we asked them if the 3.5% to 4.5% CPI forecast for the second half of this fiscal remains. 70% see that unchanged, but 20% do expect that range to be raised by the Reserve Bank in this policy. We also asked them if the stance would change from neutral to accommodative, signaling some more rate cuts, but no, 100% said RBI will stick to its neutral stance as of now. And lastly, the tone of the RBI statement is also something that is keenly watched. 50% expect that to remain same as the last policy, but 40% say they expect a more dovish tone from the RBI this time around, acknowledging the fact that growth indeed has slowed down.
Okay, Ritu, thanks for that. We'll have to wait and watch out to see what surprises the RBI pulls tomorrow. Now, here's an exclusive. We learned that M&M may still be eligible to participate in the EESL's electric car tender. Remember, Tata Motors won the bid for the government's biggest EV tender on Friday. Ronaja Banerjee, who broke that story, is here with the details. Ron, still some hope for M&M then?
Well, yes, and this is really a sort of a curious turn of events, to say the least, because the press release very categorically said on Friday that that ESL will be acquiring 10,000 electric cars from Tata Motors. And what I was alerted to by my sources is that is not the case. Tata Motors currently has a confirmed order of not 10,000 electric cars but 5,000 electric cars, because one of the rules in the bidding document that was issued a couple of months ago said that the second bidder, which in this case is Mahindra & Mahindra, will be able to participate in the bid, but provided they're able to quote the same price as the one that Tata Motors has offered. Remember, the Tata Motors price for supplying electric cars to ESL starts at rupees 10.16 lakh rupees. That is exclusive of GST. The price, what my sources are telling me, that M&M offered was a little over 12.5 lakh rupees. So if M&M is able to cut the price or the bid price by 2.5 lakh rupees or more, then they will be able to bid initially for remaining 30% of the electric cars, which is 3,000, and then thereafter there's a window for another 2,000. So clearly not all is lost for M&M at this point in time. What we also learn is that ESL will be writing to M&M to sort of re-participate in the bid, and M&M will be given a week's time. I checked with my sources both within Tata Motors and in M&M. M&M is yet to take a call whether they will be willing to cut down on their price of the E-Verito by 2.5 lakhs to be eligible for this or not. But as you said, this is really the biggest tender, and who knows, M&M might just show evinced interest, right, considering the scale that we are talking about. Tata Motors spokesperson also told me that they are aware that M&M will be allowed to bid for this.
Okay, Ram, thanks for that. Now, sticking to the auto space, the auto sector has reported strong sales growth for the month of September. The festive season, along with new launches, has generated healthy demand across segments. Most of the auto stocks surged in trade at the back of those numbers, with Tata Motors leading the pack. Naveen Shetty is here with the number crunching. Now, Naveen, take us to the key figures that have been released so far.
So I'll begin with Eicher, Kritika. Thumping numbers from the company. So in their Royal Enfield business, the growth has been 22%. Remember, Street was expecting around 20%. So the consistency continues. The surprise for Eicher was their commercial vehicle business. Over there, the growth came in at around 26%. Street was expecting a 10% growth. So that has also come in as a bit of a positive for Eicher. On the other hand, Bajaj Auto. Remember the biggest two positives, one of them being Bajaj Auto. We were expecting a cut of almost 1% in terms of the total sales, but over here, the growth has been 14%. Now, the growth was led by two key factors. One, their export business. Remember, the management has been cautiously optimistic on their exports, but over there, strong growth was seen in their export segment, and also the three-wheeler segment growth. That has been the highest ever for the company. On the other hand, Tata Motors, again, a big surprise. 19% growth overall in terms of the total sales for Tata Motors. This was led by 29% growth in their CV business. So both Eicher and Tata Motors, if you see the CV sales growth, it shows some kind of a prick up, especially in the MNHCV segment. So that is one key point. Also, Maruti, in line with what the street was expecting, 9.5% growth. Escorts also continues with that the tractor sales for both Escorts as well as M&M. I'll just combine both. Escorts grew by 34%, but M&M tractors, that grew by close to 49%. So that was also a very big key positive. Ashok Leyland continues with a 28% growth. Street was expecting a growth of almost 23% for Ashok Leyland. Last but not the least, TVS grew by close to 23%, but the key thing for TVS to go ahead is that are these numbers sustainable for the two-wheeler segment, because the management has guided for a 10% overall industry growth. But overall, if you see the auto sales numbers, two things need to be noted. One is this a one-off because of the restocking happening ahead of Diwali season? That is one thing that needs to be seen. And also, if you see the CV segment growth, the key point going ahead will be, is the MNHCV cycle picking up again, and is that positive on the economy? So these are the key two things to watch out for, and maybe we'll get more color into the overall numbers once October season pans out properly. Back to you.
Ambani-led Reliance Communications plunged to an all-time low in trade today. This at the back of the company calling off the proposed merger of its wireless arm with Aircel. Now, Arcom blamed regulatory delays and legal uncertainties for the deal falling through. The deal has been looked upon as a cornerstone for the company's plan to bring down its debt of around 45,000 crore rupees. With the proposed merger with Aircel now being off the table, Reliance Communications is now preparing to monetize assets ranging from spectrum to real estate as it strives to repay debt owed to banks. I spoke to Puneet Garg, the freshly appointed executive director of Reliance Communications, earlier in the day. Garg said that they were focused on paring debt by around 60% by the end of this fiscal. He said they were looking at a combination of sale, sharing and trading of spectrum, and were already in talks with some operators for this. Garg asserted that actively looking at selling its 126-acre Dhirubhai Ambani Knowledge City, which is located in Navi Mumbai. Garg confirmed that 7 to 8 players of global repute have already shown interest in the property. Garg assured that Reliance Communications will not become a non-performing asset. Garg also reacted on Ericsson filing an insolvency case against Arcom to recover their dues. He says that Ericsson is an unsecured lender and does not stand a chance as of today versus the secured lenders. Listen in to Garg highlighting the key reasons behind the Aircel merger collapsing.
There were many unidentified flying objects we have seen in our journey of last 1 year. And in June, when we spoke to all of you, we anticipated that this deal would be closed before end of this year, and we would achieve our objectives, which we have stated then. But these UFOs were like GTL, CNIL, and Bharti Infratel, which are all unsecured lenders. And I would say, I don't know whether they're vested interest or unvested, interest, but they were certainly there before with their lawsuits, before NCLT. As far as number one, standstill is concerned, RBI regulation provides 18 months from the date of invocation of SDR, which was 2nd June. So we have that much of time. And we can constantly engage with our lenders on the new plan. Certainly, there would be new JLF meetings in this week or early next week, where the lenders would go in detail with the plan, and then they would define the due process to be followed.
Okay, so the collapse of the proposed Reliance Communications Aircel merger has also had a domino effect of sorts of Arcom's proposed deal with Canadian alternative asset management firm Brookfield. According to sources, Brookfield has valued Arcom's towers at 11,000 crore rupees. That is the entire business. When we asked the management this question, they have clarified that Brookfield, instead of 51%, is now looking at 100% sale, and the valuation will be lowered in due course. Nisha Poddar is here with the details. Nisha, what are you picking up in terms of how much the valuation has been reduced?
So sources with direct knowledge share with us that post the failure of merger with Aircel, well, for Reliance Communications, it is now a difficult territory to work out its deal with Brookfield as well. Sources suggest that that particular transaction has hit a roadblock at this point, though there is a door kept ajar by Brookfield to renegotiate this particular transaction at much lower valuations, given the desperation of the other side and given given that the deal construct has changed tremendously. So we do gather that Brookfield is under no obligation to buy out Reliance Communications tower assets. Earlier valuation was touted at 11,000 crore rupees for 100% of the tower assets of Reliance Communications, and that could slip much lower at this point because negotiating power for Brookfield is much higher. Also given the fact that many more telecom tower assets are on sale currently, namely Bharti Infratel. Indus is expected to merge with that. Also Idea as well as Vodafone looking at selling their standalone tower assets. So given this entire dynamics of the telecom sector, at this point, this transaction is in troubled waters unless it is at a much lower rate, but that will put pressure on Reliance Communications, which is looking at a large chunk of money for the repayment of 45,000 crore rupees of debt coming in from this transaction.
Okay, Nisha, thanks for that. Staying with this story, Indian banks may have to take a haircut of 6,000 crore rupees in their loans to the telecom firm. This after they convert part of their debt to 26% equity in the company. Lata has the likely bank recast that banks are expecting. Lata, what are you picking up?
Well, at the outset, let me tell you, this is coming from banking sources who have a vested interest to tell you that the deal should go through in this fashion. After all, they don't want such a massive loan to become an NPA. So, you know, we don't know whether it will ultimately turn out as optimistic as I'm presenting it to you. So the total debt is 46,500 crore. About 6,500 crore is off-balance sheet debt. The remaining is 50-50 approximately foreign lenders and Indian lenders, maybe a little more for Indian lenders. So an SDR will stand only if the equity changes hands, 51%. So in this 51%, the Indian banks will get 26%. The SDR itself will stand, the strategic debt restructuring, and therefore stand still, not having to classify the loan as NPA for the next 18 months will stand, provided the Indian banks by 26% and the foreign banks by another 25%, making 51% outside the current promoters of Relcom. And then what is the debt restructuring they're expecting? Even this conversion of debt to equity will take away only about 2,000 crores max of the debt. What happens to the remaining debt? The telecom tower deal is expected to take away about 5,000 crore. If they sell it to Brookfield, 5,000 crore is either paid back or the debt is assumed by that company which buys the telecom tower. As you just heard, Brookfield could buy it for as low as 5,000 crore compared to the earlier 11,000 crore. Sale of the mobility business, which they are hoping all the spectrum, provided permissions come from the government, that could assume about 8,500 crore of the debt. The development of DAKC land will go to an SPV, which will probably assume about 4,000 crore of the debt. And the balance entity, which will be the undersea telecom cable business, data center business, those will assume about 10,000 crore of the debt. What will be left is about 12,000 crore, which will be written off 6,000 crore each by Indian and foreign lenders. This, again, let me emphasize, is what the bankers are saying. We don't know how much of this deal will go on, will be actually done at the valuations that the bankers are expecting.
Captive power producers are facing a shortage of coal, and they have raised these concerns in a letter to the coal ministry as well. Captive power producers say that the shortage has been triggered because Coal India is not sticking to its contractual commitments. Anshu Sharma is here with details. Anshu, how acute is this shortage and which are the sectors that have been hit now?
There was a shortage of coal supply in the past for the power sector. Now we understand that sectors like aluminium, steel and cement are facing acute crunch of coal supply. They have written a letter to the coal ministry seeking increase in railways rake meant for supplying coal, as well as asking Coal India to meet its commitment of supplying coal. We understand that 150 rakes of coal is pending for over 6 months for Hindalco, 108 for Vedanta for the past 6 months. The companies also allege that industries are running only at 65% of committed supply of coal by Coal India, and they are facing a huge crunch of logistical supply with regards to coal. They also allege that there is a deficit of 30 million ton, as the government has asked Coal India to supply domestic coal to independent power producers which are on the port, which were earlier importing coal for running their plants. So there's a deficit of 30 million ton, as well as there is logistical issue of railway rakes and commitment by Coal India for supplying coal for these sectors. So these companies are now facing huge crunch of coal supply, and they say that this will impact their productivity. Back to you.
Okay, Anshu, thanks for that. With that, it's a wrap on this edition of After the Bell. Stay tuned to CNbc TV 18 Markets Today Talk Back. We'll take the action forward on the other side of this short break.